Good morning. You're listening to Insurance Matchmaking, your path to health, life, and Medicare coverage with Matt Libby Insurance. And now, sharing his knowledge, here's your host, Matt Libby.
All right. Welcome back to Insurance Matchmaking. Been a busy week this week. Been a busy month. May is just turning out to be very busy. Fairfield Ladies Club, which is always the first Wednesday of the month, and then the Chamber Bizapalooza. And I think I may have mentioned that I'm doing bingo at the Senior Center. That's going to start. I think when this show airs, that'll probably be past also. But I'm going to start doing that the second Friday of each month. And then the ribbon cutting. We're doing our ribbon cutting at the new office and it's almost not new anymore. We moved in February, but going to do that as a ribbon cutting and an open house for client appreciation. Hopefully, I'm not sure yet what the menu is going to be. Maybe hot dogs, maybe chicken, maybe pizza. Pizza's real easy since they're pretty much almost next door. But you don't have to be a client. Come on by. We're doing the ribbon cutting, so it's going to be from 10 to 2 is the open house. At 10:30 is the time that's slotted to go ahead and cut the ribbon. So I'd love to have you out. The bigger the crowd, the more fun that is. And Teresa was on my show a couple of weeks ago. We're hoping that her coffee trailer is going to be up and running, and she's going to be able to bring that. But don't have confirmation on that as I'm recording today. But hopefully that'll be a nice treat if she's able to do that. And if not, well, oh well. But come on out. Even if you're not a client, if you're a listener, come on out, and maybe we can make you a client. But it'll just be kind of a fun day. It's a Friday. Come out and get lunch, get a snack, whatever. And there'll be door prizes and things and drawings. So, festive occasion. Like I said, May's just been really busy. So, and that brings up being May. I want to talk about something. I don't know if I've talked much before on my show. That one of the things that we do protect is in our avenue, we think is your most valuable asset. A lot of people think, well, my home's my most valuable asset. It's probably your biggest, most expensive asset, but it's not necessarily your most important asset. And a lot of times, and you probably think, oh, he's talking life insurance again. Believe it or not talking life insurance, but we get insurance for just about everything. We've got insurance on our cell phones, we get insurance on our car, our home, but the one I'm talking about today is your paycheck. Because if you don't have that paycheck, all those other assets are probably not going to last very long either. So that's why we really want to kind of talk about that. And the reason I bring that up is May is Disability Insurance Awareness Month, or sometimes called DIME, but it's spelled D-I-A-M. But I wanted to address that because, like I said, I don't seem to talk about it much. A lot of times, when we're doing somebody's health insurance, we should bring it up more often. But usually, it's hey, we're trying to get done. They want to get the the least expensive, lowest deductible health insurance you can get. Oh, and maybe throw in some dental and vision. And yeah, that's the easy road. And sometimes, it takes a little more effort on our part to point out some of those things that maybe you hadn't looked at. In some of the trainings I've been in, it's like, our job is to, as they call it, discover those pain points, because we have to bring up uncomfortable subjects. I mentioned life insurance earlier. Nobody wants to talk life insurance because we don't want to admit to our own mortality, especially when we're young. I always joke, the young people, they think, they're 10 foot tall and bulletproof. And then I also say, hey, get your life insurance now where you can get it really inexpensive because you're young and healthy. Don't wait till you're old and round like me. Because as you get older, it goes up. So, and height and weight can also make a difference. There's a lot of different ratings when it comes to life insurance. And it's the same thing on disability as I'm mentioning. Your height and weight can make a lot of difference of what you're going to pay for that insurance. Obviously, the healthier you are, the lower cost you can get on your insurance. Because there's a couple different ways, a couple different levels when it comes to disability insurance that to help protect in case you're not able to work. And one of those that we generally call income replacement. Most plans will call it that. And when we use that term, that's a fully underwritten disability plan. You have to go through the health screenings. Some companies, depending on how much you're doing or what your line of business is, you could have to do kind of sort of a physical, like we call a paramed, where you do have to draw blood, have a nurse take, put you on a scale and take your blood pressure. Some of the plans will go in that much in depth, and again, it depends on how much coverage you're looking for. But for the most part, what I'm dealing with are people either, small business, self-employed, or maybe you're working for somebody else, but you don't have disability insurance, so they don't offer it through work at all. And so we can do some low-cost disability insurance on an individual basis. The other thing is there are those that, there are those work site benefit plans. The problem is when you change jobs, those don't generally follow you. So if you get one as your own plan, then you can take it with you to whatever job you have. And once you have the plan, it's yours. As long as you pay the premium, they're not going to take it away from you. If you have some health issues, they're not going to take that plan away from you. Even if you have a claim, the policy can reset after a certain amount of time if you go on a claim period. So there's a lot of different things you can do there. And I mentioned there are ones, for professionals that, I've been listening to some podcasts and they're talking about, like the doctors and the dentists that, hey, if they're sick or hurt and can't work, there's thousands of dollars that they're not making. And probably, depending on how long they've been at it, they may have student loans still to repay. If they own their own practice, they're renting that building, they got employees to pay, and that can get really expensive. And so that way, like as I said, your most valuable asset is your paycheck, your income. Not necessarily, I say paycheck, and of course, when you're self-employed or in a professional capacity, you don't get a paycheck, but you still earn an income, and you want to make sure that continues. You probably have a mortgage. You don't want to have to lose your house because you're no longer able to pay the mortgage. So I talked about those underwritten plans. And again, like I said, when you're doing for several $1,000s a month income, they may go a little bit more in depth, and you maybe have to do a paramed to qualify. The other is they're guaranteed issue disability plans, and those plans are generally what we call accident only. They're going to, and one reason we say accident, they're going to pay if you get hurt. You throw your back out, you break your leg, and you can't work for a certain period of time, and they'll call that total disability. Now, total disability doesn't mean you can't recover and be fit for work again. And that brings up another issue is sometimes that disability can cause you to no longer be able to do the job you do. You may be recovered, but not 100% recovered to where you can continue to do the work you were doing. And so you end up taking a lower paying job so you can still pay the bills. There are plans that will also still pay on that, and so you might be able to extend those benefits out longer. Or, it's kind of like unemployment. It's like once you go back to work, well, you're not on disability anymore, so that support check goes away. But there are plans that have what we call riders that you add on that if you're not 100% or you're not earning what you were before, your disability plan can make up that gap. So those are some things we can look at. Those are some options. So that's kind of what I wanted to go on. Those about the, at a minimum, get an accident disability plan. They're probably about a third of the price of a full income replacement plan. And especially if you're doing the kind of work like, you have a lawn service or you're doing construction. One of the companies I have also covers roofers, because a lot of companies won't cover someone who's doing roofers or police and fire. And we do have plans that will cover the individuals in those lines of work also. So if you're working, or you're working part-time security, that may be something to look at. The other thing I want to kind of get into on that is what's called business overhead expense. Because any of you out there that are self-employed, you know how much hoops you have to jump through for loans and things like that to be able to prove your income, because you have a lot of revenue, but your net income when you file your taxes is much less than the money that's coming in because of your cash flow. And a big part of that cash flow is your business overhead, your licensing, your payroll. If you have a brick and mortar, you have rent and utilities, all those things that you have to you have to keep up. Maybe in advertising even. You want to keep your business going, but maybe you're not able to work at your business, and to be able to keep it going, to keep your employees paid, keep the lights on so the business doesn't get closed because you no longer pay the light bill. you have those overhead expenses. So the reason I bring that up is, again, that net income. If you're just going for personal disability insurance and they say, well, what's your income? You have to prove your income. You need last 2-3 years of income tax returns to show what your net income was. And your net income's $10,000. Oh, okay. So, I'm rounding numbers. I know this math's not exactly right. And they're saying, well, so you make $1,000 a month and you can only get 60% of your income as disability coverage. So if you're making $1,000 a month, you're going to get $600, and that's not even paying the rent, or that's not even paying a portion of the payroll for your employees, because you're not bringing, whether you're the main salesperson for your job, or you're doing 50% of the labor, so you may need to hire somebody part-time to help out. You need that income. Whereas with the business overhead expense, it's going to look at, okay, how much revenue is coming in, and how much are your bills, and you can get that business overhead disability insurance to cover those bills based on your revenue, not your net income. So if you're self-employed and think that you can't get disability insurance because your net income isn't there, or you haven't worked very long at your self-employment business, give us a call. We'll take a look at it. So that's one of the ways that you can protect your business, protect your livelihood with this business overhead expense. And looks like we're getting close to the break here. Just again, a reminder, ribbon cutting on May 17th. I think I mentioned the ribbon cutting at the beginning of the show here and didn't say the date, but Friday, May 17th, that will be our ribbon cutting at 1683 South Jefferson, our new location. Hopefully have a good crowd. Hopefully we'll have good weather. Who knows? You never know in the spring in Tennessee whether you're going to have nice weather, hot weather, stormy, windy, rainy weather. We'll take the hot, but the windy, rainy, hopefully we won't have that. So that's a biggie there. Really want folks to come out for that. And we're going to take a break and be right back here in a couple minutes after the commercials and talk a little bit more about disability.
Hi, this is Marvin Long, your local Twin Lakes Business Solutions consultant. At Twin Lakes, we understand that every business is unique, which is why we offer customized solutions designed specifically for your needs. Enjoy lightning-fast internet speeds up to 10 gig, along with HD TV and reliable phone systems, all backed by our 24/7 customer service. Let Twin Lakes support your business with the connectivity it deserves. Call us today at 1-800-644-8582 or visit twinlakes.net.
Looking to spruce up your home without breaking the bank? Visit Habitat Restore for incredible deals on furniture, appliances, home decor, and more. Plus, when you shop at Habitat Restore, you're not just getting great deals, you're also supporting your local community. Are you looking to make a meaningful impact? Consider donating to Habitat Restore. Your generosity can make a world of difference. Habitat Restore, open Tuesday through Saturday, 10 a.m. to 6 p.m., and located at 560 South Jefferson Avenue in Cookeville.
And now, back to Insurance Matchmaking with Matt Libby Insurance.
All right, welcome back to Insurance Matchmaking. As I talked about in the first segment, we are in Disability Insurance Awareness Month, so I want to talk about some of those things that affect disability insurance. And I was talking about business overhead expense as one of the ways that you can have some disability coverage to cover, protect your income. And it's not strictly just based on your net income. Also wanted to kind of cover some of the, as I mentioned, that roofers and firefighters and police officers can be covered. Truck drivers, those all fall under that 1A. It's kind of interesting. Construction labor is in the 1A classification, but a carpenter is in the 2A because you're a little bit more skilled. If you're like you're a journeyman carpenter or something like that, you maybe have some other qualifications, not just a construction worker, but you're doing more skilled labor when it comes to carpentry. You can be in a different class, but 4A, I don't know why each one has an A after it, but those are your professionals: computer techs, architects, people that work in an office. We're more worried about them getting sick and not being able to work versus having an accident. Not to saying that you can't have an accident at work, but in your occupation, you don't run too high a risk of getting hurt, like someone who's doing construction and those kind of things. So there's different limits that you can get on these plans, and the company that I'm looking at, I'm not going to name the company today, but you give me a call, or I don't mind telling you one-on-one. But issue ages from age 18 to age 60. So unfortunately, those of us that are on Medicare or getting close to a Medicare age, this particular plan is not going to help too much on that. But you can get 1 year, 2 years, 5 years, 10 years, or even to age 65 or 67, depending on this kind of state-specific coverage. So just because you're 60 doesn't mean you can only have the disability for 1 year. You can still have it that will pay for a couple of years. And then we could have what we call elimination periods, and that's how long you think you could go before you maybe need to start drawing on the plan. And the reason I bring that up is, and it's just this plan. Some plans you can, as soon as you're classified as disabled, you can start drawing a check, and some are 14 days. But the longer that elimination period is, the lower your monthly premium cost will be, because a lot of times, if you a month or 2 months that you're not able to work, then you may and then you recover and you go back to work, then you don't file that claim. So that's part of the reason that, that one, you're waiting longer to start drawing it, so you may not ever draw it, or you're going to draw it for less time because you're already starting to recover from whatever injury or illness you have, possibly, during that elimination period, so you won't be drawing your disability as long because you're able to return to work within a certain amount of time. So those elimination periods, the longer they are, the lower your premium will be. And on this particular plan that I'm looking at, starts at 30 days, but you can do a 30, 60, 90, 180, or even a full year, 365 days before you start drawing. And that comes into play a lot of times when it's going to be a much higher amount of coverage. And, you may have savings or you have a spouse that's working that you can depend on their check to kind of help you out. But if something happens after a year, you're still not going to be able to work, and you're going and you're going to need that disability ongoing for several years. That 365-day elimination period could be useful. It will help keep the premium down. So I've never written one like that, but that doesn't mean that that's not the right fit for somebody. And then your benefit amounts, you have some maximums. I talked about the 4A and the 3A. So the maximum limits on a 4A is $20,000. 3A is also $20,000. $10,000 for the 2A, and $8,000 for the 1A. And that's a monthly benefit. That's the max. So you can be a high income earner and still draw quite a bit of what you would earn based on your income. So that's some things to look at. And then I mentioned riders. So we do have the optional riders. Some plans, sometimes it works out. Of course, you're going to pay a little bit more up front, but you have return of premium riders, so that when you hit a certain date and you never filed a claim, you get most of your premium back. And I say most of. There's usually some costs that are going to kind of be incurred in the policy. You won't get necessarily 100% of it back, but you probably get at least 90% of the money that you paid in back if you never claimed. So that's not bad. How many times have you had that on your car insurance? When you don't have a claim, sometimes they'll give you a discount going forward, but usually that discount's kind of like the way they do when they increase government spending. And they say it's a 5% reduction, and that just means they're only asking for a 10% increase instead of 15%. So, sorry, little rant there. But that's one thing. Guaranteed insurability rider, which means that, hey, if something happens down the road, you can still increase your coverage, even if you're not in the best of health when you want to increase that coverage. That one's for, like, if you're not able to do some of your duties. Critical illness benefit rider. So if that disability is coming up because maybe you got cancer or had a heart attack, something like that, it'll actually pay a little extra for that. And again, that's an additional pay. Automatic benefit increase riders. You anticipate your income's going to go up every few years. It'll increase your benefit because anyway. Just you don't have to reapply it. It will go up based on that rider. I mentioned the own occupation rider. That's like if you end up having to go take a job that's not in the job that classification you were in when you got the policy, that it would pay some, even though maybe you're not able to work in that occupation anymore. And this plan that I'm looking at doesn't have it, or doesn't show it, but I do have some policies out there also that the family leave, if you're going to take family leave based on a birth of a child or taking care of a family member who needs you home to be able to help them out, and you're able to take some time off from work, but generally you're not getting paid for work during that time period. So that's a nice rider that you can add on to a disability plan. A lot of plans do not cover having a child. The one that I mentioned, this is not the plan that I have here, but one it'll pay a $500 bonus if you go on disability for having a child, and you can also do the family leave, and it'll pay, and I think it's just 6 weeks, but it'll pay 6 weeks. So it's kind of like pay 6 week allowance for that maternity leave, but it's not covering childbirth. A lot of disability plans will not cover routine childbirth, but if something happens and you end up being injured as part of the delivery process and you're disabled because of complications, they'll cover that, but they're not going to cover, hey, you just can't go to work because you're on maternity leave. And there are some restrictions there. Obviously you can't get that kind of coverage once you're pregnant. So if you go and you have taken that test and going, oh, congratulations, we're expecting. Well, we'll do a gender reveal here in a couple months. You're not going to be able to get a disability plan during that time. In fact, that's going to be considered a pre-existing condition and would prevent you even from getting just a typical income replacement plan because, again, you're running the risk of having something major medical happen because you have during childbirth. So you need to get, if you're, as we say, if you're of childbearing age, maybe you're newly married and you're not in a hurry to start the family, but in the next year or two you may start trying. That's the time to get a disability plan that will help make up some of the work loss when you do have your child. And the plan that I was mentioning earlier about has that little childbirth bonus. You have to have had the policy for 10 months prior to giving birth. So that way, and the thing is, you may have bought it and you end up with an early delivery or something like that. It's still, it falls under that, less than that 10 months. That's why 10 months, there's not going to be any early delivery, premature birth, so unfortunately, that's not going to help out. And that's why you don't want to put it off. If you're thinking that, hey, I might want to have a baby in the next couple of years, and I'm not going to get paid by my job when I take maternity leave, I want to have a little bit of extra income coming in, especially since we got another mouth to feed. Let's talk about some disability insurance and get you covered now, so that when you do have that little blessing, as we call them, you're not losing your whole paycheck. So that's one of the reasons. But I think I kind of want to stress against some more, and not that women aren't self-employed, but when I think self-employed, and my concern, I guess maybe because I did it, is like mowing lawns. It's that cash business that if you can't work, that money's not coming in. Even if you have a crew. I mean, most people I know that have a lawn service, they don't just send a crew out to go to work. They're part of the crew. They may not be doing as much because they've hired people. They may be doing more of the sales end. They may have a crew out mowing a yard over here, and they're over meeting with a business or a homeowner to give them an estimate on theirs. And again, you're not growing your business if you can't go out and help or go out and market to them. If you get hurt, and I look back and I'm so glad I wasn't doing lawn service that summer that I busted my knee. I'm trying to think. I think my son came and mowed my yard one time, and then because it was July and it was hot, it was a couple more weeks I was able to wait. I was able to get out on my riding lawnmower with my knee brace on, and I used my cane to push the brake so that so I could start it and drive it. Kind of the accelerator pedal was my right leg, so I could do that. It was just to hold the brake, and was able to get it done. It was fun, and boy, I was worn out afterwards. But I wouldn't have been trying to do that if I was doing it as a lawn service. But doing it for myself, I was able to get out and do it. And I think it was therapeutic that I could get out of the house and mow my yard. I love doing it. My wife and I joke, sometimes that you had that shower thought. It's like when you're in there, the water's running over your head, you can't really hear anything, and that's when your mind kind of runs through you and you're solving the world's problems while you're taking your shower. Well, I always said I get lawnmower thoughts because, again, I got my hearing protection on, the drone of the motor, can't really hear anything else, and so that's when I start planning and thinking of things to do in the future. So that's, I guess, probably why when I think of self-employed and those that probably need some disability insurance, I think of guys that are out there doing a lawn crew. And I say guys, that's gals too. So, we don't discriminate. If you think that you could benefit from this, give us a call. Again, until next time, check us out on insurancematchmaking.com. We do get out the past shows on recording and get those uploaded into a YouTube so you can check back on past shows in case you've missed some. And until then, we'll see you on the radio. Don't forget, May 17th, ribbon cutting, open house 10 to 2 o'clock on Friday, May 17th. And have a great day and have a wonderful weekend, and we'll talk to you soon.
You've been listening to Insurance Matchmaking with Matt Libby, your path to health, life, and Medicare coverage with Matt Libby Insurance.